Bjorn, many thanks, and over to you and to our insurance panelists.
Good day. Yep. We were just making the joke, this is apparently the interest in insurance. Not many people show up after lunch. Anyway, allow me to introduce myself. My name is Bjorn Hartong. I sit in a TAPA board, but that's not paid. So I work for Zurich Insurance, and they do pay me. We have a few other panelists. Maybe you can just briefly introduce yourself.
Test. Hi. Glad to be here. Thanks for TAPA having me here. Jan Rietberg, AIG, 15 years already with the risk consulting team. And over to the next, Ian.
Afternoon. Very nice to be here. Been coming to TAPA for many years now, and great opportunity to sit here. Ian Allman, I am risk control manager for Munich Re Specialty. Worked in insurance for about 40 years, of which about 30 of those have been involved in loss control.
Hi, nice to be here. I'm Thomas Ziehn, working for KA Insurance, which is a 100% subsidiary of Ergo, based here in Düsseldorf. I'm a risk engineer.
Yep, great. Well, these are the people you have to do it with for the next 45 minutes. I think it's good to explain that we are not underwriters, so we don't determine premiums, policies, terms and conditions, anything. We're all involved in identifying risks which our customers have and hopefully reduce them. And if they don't reduce them, we send them to another insurance company. Right, let's start maybe about the data that we have. Ian, how about doing some myth busting about the insurance data that we have and the quality of insurance? I mean, do we have all the data as an insurance industry, as a company, about losses?
It's minimal, I think, is the way I'd describe it, isn't it? We're all very insular in our own little environments. We kind of know what's going on, but don't really have an awful lot of data to hand. That said, we do collaborate with the likes of TAPA and other organisations and provide our data. And I think what I've seen over the past sort of 5 years is the power of that data. That we as insurers, or everybody in this room, can utilise to try and mitigate loss. We're in a situation now where we're almost into predictive analytics because of the power that data provides. So it is huge, and I know that the message here is to provide data to TAPA, and as an insurer, I would endorse that because it feeds into the bigger picture of what we're all trying to achieve.
Thomas, is there anything on a global level or even EMEA level about insurance data that we share, or is it?
No, it's always a big issue if you, as we know from Thorsten already, everybody should share the data, but honestly, we have of course our own claim system, but I think they only can filter to losses, to damages, maybe wet cargo, but if it comes actually to robberies or whatever, they cannot do. They know later on, of course, who's insured, what's the amount of the claim, but nothing specially that we can share in this range.
Okay. So Jan, do you think we should do more on claims?
Yes, I think we should do more. Can we do more? That's the next question, and it's not easy because, like the panel said, the data is corrupted. We are generating data in claims. Claims is, they have their files to pay a claim in a way, and once the information they have to legitimate the payment, then they will do it. If has been a hijack, truck has been hijacked and ditched alongside the road, may end up as an road accident instead of theft. And that happens in our claims files. Do we have all the data? Absolutely not, because there are deductibles, and the majority of the thefts are within the deductibles. You pay it all yourself, and you have the data. But we have a lot of data. But I think the data that we have, I do talk internally with our claims, and I think we need to share it with TAPA, at least what we have, and at least get the data into this, because you have seen in the days before and the sessions before, this is the only platform used by police forces, and we use it as well.
Yeah, so that's maybe some good news for some companies or bad news for the industry in general. So we don't really know what's going on, except if the few customers that we have some more losses. This is not just with us, it's general in the industry. So the insurance industry works on old data, so they sort of predict what's going to happen in the future based on old data, and that is not always that detailed. I also have to say that, and maybe you can also speak to that, is theft a large issue of our claims? Ian? Is it?
Yeah, I think theft is, it worries us, well, the way I describe it with theft, because it's not really, when you take an insurance policy out, theft is probably not your primary concern. It's the major catastrophe, it's fire, it's the ship sinking, or whatever it may be. Theft is almost an incidental peril, really, isn't it? And yet, it does cause us a serious amount of worry. The losses we see on theft are, pretty big. And it's being able to put the mitigating strategies in place to control that is so difficult for us.
Okay, cool. So the name of the panel was to talk about loss prevention. So loss prevention is basically we try to identify the challenges our customer has, and then hopefully propose some mitigation measures together with the customer. So some customers think that buying an insurance policy is a loss prevention. Jan, would you agree with that?
If I talk privately, definitely. Business-wise, of course not. Because, within an insurance policy, we do business. We want to make a little bit of profit, and we want to do business with people that we trust. We are business partners. If somebody is not taking any measures, if we talk about TAPA and theft and all that stuff, if somebody is not taking any measures at all, then why should we have the trust in covering you in case of an incident? We like to cover an unforeseen event, something that you don't know that's going to happen. We all don't know. So, and the moment that you send out a truck, curtain cider, park it the weekend alongside the road, it's going to happen. Do we have trust then? Not really.
So Thomas, on the short term or long term, does it make sense to implement loss prevention?
Yeah, for us, maybe just to make sure you're not insured with us if we don't make any analysis about the risks, what might happen. And this is the same story for our underwriters. They come to us and say, well, what do you see? What do you think is the potential risk? And of course, some people say or think, well, insurance is only exchange of money. But at the end of the day, any of the insurers, they like to have a long-term partnership at least. And therefore, I think we are dealing with these cases and with these clients at least. If we are aware what kind of risk we have, we are talking to our clients, and then we of course like to have a long-term agreement and a long-term common understanding about the risk and what has happened and what we might have to implement in order to prevent from losses.
Okay, thanks. Ian, do you see a difference in companies that actually have implemented a proper insurance program with loss prevention versus the one that just do the cowboy style, nothing?
Yeah, definitely. You've only got to sit in this room, and it was fascinating yesterday when we had the manufacturing panel discussing their approach. Amazon, there's a lady from Amazon this morning. Their approach to risk management. They put a real value on it, and so that's at the high level, and that's where you see the difference. And then at the lower level, we will engage with clients who do take it seriously, and they put their mitigation strategies in place, and ultimately, I wouldn't say don't suffer the losses, but suffer fewer losses is the way I'd probably describe it. But there's an awful lot of companies out there that do see the insurance as a complete risk transfer mechanism. And I think they suffer for that in the long run, because the minute they have that first incident that impacts them, it's not just that incident that impacts them, it's all the other costs that are associated with that loss that then they suddenly realize that I've got to do something here. And once you're on the back foot with it, it becomes very, very difficult to implement. your security measures, if you like, have been breached. Somebody, we talk about the insider threat yesterday, we see all that. It's already there within your business. So if your loss strategy doesn't grow with your business, ultimately you will suffer for it, yeah.
Great, thanks. Maybe something, Jan, so because Ian mentioned, so the additional cost of insurance. So what is actually insured under we call it marine policy, but that's by tradition because in the beginning we only insured ships. But now marine policy is technically a logistics policy. So do we insure everything if something goes missing?
No, there's a long list, of course, but you know, what we insure, goods in transit, or the liability. You know, if you're a logistics service provider, it's your liability. It can be an increased liability in value, or it's the cargo value. But it's just the monetary value of your cargo. So if you lose that part, all the rest is not insured. Like Ian was mentioning, you know, the frustration client, your brand mark, and you know, not delivering, etc. So it's a lot of frustration, and that costs a lot more. And we are aware of that, but you know, it's just a peril. You know, your goods that get lost, and that's going to be compensated. And if that happens a lot in a frequency, then we look at your frequency and we say, well, shouldn't we put that under your deductible because you know it happens anyway. So that's a bit that the insurance looks at. We want to insure the thing that you think that is not going to happen, and we both think, you know, this is something that's unlikely to happen.
Yeah, I was just going to add, I think one of the things I see more and more now is that damage to brand reputation through the losses. Yes, one or two, but when you're getting frequent losses, we see the communications that go on between companies, and there's a real frustration, and people will take their business somewhere else because they put the trust in the logistics providers to deliver those goods, and when they're being subcontracted out or they're using freight exchange sites, which we'll come on to later on in the discussion, that the client, the owner of the goods, is completely unaware of these situations, and the huge frustration when they suffer their loss because they've made promises their end to deliver, and when it doesn't happen, like I said, it's frustrating for them.
I know in the UK you did a research a few years ago based on the additional cost of loss. Could you comment on that a bit? How much extra does it cost for us? So for every euro which is insured, so if you lose something, we will pay you out euro of insurance. What's the additional cost?
Yeah, so we formed a working group, if you like, or a forum a few years ago called the Supply Risk Industry Partnership in the UK, which kind of brought all the stakeholders in, or a lot of the stakeholders in supply chain around the table. So insurers, trade bodies like the RHA, clients, police force, etc., to look at how much a cargo loss actually cost, and we did this in conjunction with Plymouth University, and the outcome of we estimate that it's 7 times the value of the cargo loss is actually the true cost of the crime. Yeah.
So that's a lot of benefit if you actually prevent the loss. Right, Thomas, do you see also that companies are using this real cost of loss to justify investments in security or loss prevention?
It depends, because I think all the insurers, they have their own risk engineers, and we have maybe, or I'm sure we have a different view on certain risks, because our big advantage is we are learning, or we should learn, about the claims history, what we have with different clients, and therefore we have a different perspective on the risk, and going to the client, and not that we know everything, but at least we have the experience about different other claims, and of course then we want to avoid such claims again.
Okay, great. So I do know from case examples that we've had meetings with customers where we basically said the risk you have is at the end of the supply chain of having a penalty for non-delivery, for instance, or customer reputation, or even legal actions, because if you lose the stuff, some people will be unhappy. And mitigation factors are probably at the beginning of the supply chain. So, Jan, do you agree that companies should have a more holistic view on loss prevention, or not just looking at a transport from A to B, but at the entire logistics chain?
Yeah, absolutely. You know, it starts already with your production. You know, if you can't supply in your production line, and even in that area, and it's indeed, you know, the full logistic chain from A to Z.
So who would then be in lead for such a program, Ian? Is it then the security manager that has to run this, or would this be a level up with security just being a beneficiary of the loss prevention program?
I think that's the difficulty companies have, isn't it? Is having somebody to interrogate the supply chain. I mean, it's, you know, they're a bit like spiders' webs, aren't they? Really, you know, even a small business has a relatively complex supply chain. So when we've done you know, gap analysis with companies and looking at the supply chains, it's amazing the complexity of them. So it is difficult for organisations to actually do that. So there was somebody made a comment yesterday about know your supply chain. Yeah, that's what we all want, but the reality of that is it's unbelievably difficult to do. We can do it, and we engage with partners that will act on our behalf and do that and provide the gap analysis for companies. But unless that company has got their own security manager embedded in it, it's very difficult to achieve. Yeah.
Okay, great. So if these costs are not insured, Thomas, who's then paying for the costs?
Yeah, all of us is actually paying, or the clients especially. The thing is always, if you're talking, we are cargo insurer, we need to know what cargo should be insured. Sometimes these are cars, sometimes these are mobile homes, sometimes this is a big industry client or some pharmaceutical stuff, and it always depends, and therefore you have different risks, and the bigger the client is, the experience is it is very, very difficult to talk to the right people, because the entities, they only have their own view of themselves, and they partly organize the transport. Sometimes it's done by the client, and it depends on the Incoterms, but if you see a big client, sometimes you have a lot of variety in regard to packaging. Packaging, of course, is a money-driven aspect, and everybody tries to avoid packaging. So therefore, at least big tanks, for example, only on a sledge, and then here you can go, and at least maybe on deck or whatever. And this is a big issue where you really have to talk to the right people and say, well, at the end of the supply chain, there's always a client, and the client is expecting to receive the goods in good order, undamaged, unscratched, and he's waiting for it because he wants to start his production line, and therefore it's hard to say, but it's a big job.
Okay, great. Thanks. Some experience maybe from my side as well. We have seen customers that take the total supply chain approach, and they are looking at the return of invest for implementing a loss prevention. And the return on invest is not just the insurance value. They do calculate with this higher price per thing that they lose, which makes it better to show to senior management because you have larger numbers, which is also interesting for the companies. But mainly, it's a lot about the non-tangible stuff. How do you qualify the fact that you have customer satisfaction? Could you put a value price on it? Probably you could, but it makes it very difficult. Competitive advantage is one of the items which is currently very tricky. You see it now also in the current developments where the world is changing a bit. So where do you now put your factories? I think now you have to wait until somebody says something different the next day. But yeah, so that's a bit of a challenge. Okay, so I think we can agree that having loss prevention is actually beneficial for the companies. Okay, cool. Thankfully. Okay, let's step a bit more on what we see, because I think all of us are frequently out in the field. We have a lot of customers that lose stuff or break stuff. So let's spend a little bit more time on some trends which might be of interest for you as well. Let's talk about fake carriers. Yeah, Jan?
Yeah, I think, you know, within logistic security, the way that I see it, that's one of the biggest risks at the moment. Combined with cyber, with intelligence, with data, the moment they own your data, but you know, I don't need to explain these people, you all know that. But you know, recently I already saw it, and they steal anything. So even a fake carrier stealing low-value candies, you know, but they do it. They steal everything. And it was really a fraudulent pickup via email, and you know, they stole the data. So that's a big risk.
Yeah, I think, you know, one of the areas that really, this is one of the areas that really frightens me. I think more so because it's trying to educate our clients as to what's happening in that space of fake carriers and whatnot. I mean, we get notifications from Wim de Keizer almost on a daily basis. I don't know whether Wim's in the audience, but you know, I thank you from us that we get notifications from you. But yeah, but trying to get that information down to the clients, and you know, that's what crime gangs do, don't they? They exploit the vulnerabilities and then almost naivety of some of our clients that you know will click a button and not check the web address is correct or whatever. Yeah, this is one of the areas that I think sadly we're going to see grow even further. What we do about it, I don't know, to be honest with you, other than educate people.
Okay, thanks. So I was at a conference last week, preparation for the IUMI meeting, which is the International Marine Insurance Association. And there they mentioned that the criminals are getting smarter, so they don't use the freight exchange sites anymore. They just use the freight exchange to find out who's offering business, and then they send a direct email to that company and basically offer something just a little bit cheaper. So the freight exchange is completely taken out, which means there are no additional checks which the freight exchange companies try to embed, and the criminals get hold of the freight anyway. Much easier, and also less support from anybody helping them. So they evolve. They are pretty smart. They are also going on with the technology. I think sometimes they're even leading in technology compared to some of the logistics companies. So yeah, fake carrier is definitely on the horizon. And it's not just, what I also found out last week, it's not just EMEA. They are also stealing a lot in Asia, US, and Latin America. Well, funny enough, Latin America, they don't have much fake carriers. They just show up with big guns on the road and take you out. So you don't need a fake carrier, you just need a big gun. So it's a different modus operandi, but anyway. Thomas, do you see any hotspots in EMEA that have recently picked up?
Yeah, we look at the IIS information service and we see the hotspots over there. But the thing, I think, our problem is we think that our client has implemented all the security measures. And we recently had a fake carrier as well. Of course, everything was implemented, but he subcontracted, and this was forbidden. And if you subcontract, yeah, now the cargo is gone. It was some chemical stuff. I don't know what they're doing with it, but it was a claim at the end of the day. And now, yeah, our claims guys, they say, well, the recovery action looks quite good, but the cargo is gone, and you still have the fake carrier. And I think they're dealing all over.
Okay, Ian, any hotspots, new trends in EMEA rising?
I can really only talk from a UK perspective. I mean, the UK, if you look at our data, is one big hotspot really. But within there, we're, you know, we have our own hotspots. It tends to be around the major transport routes, you know, and that's where businesses, you know, build up. We've got warehouses along the M1, along the M6. You know, if you look at our heat map, yeah, there are definite areas that where crime is prevalent. We also have some big organised criminal gangs operating in the UK, you know, 200-300 strong, who, and the UK is not that big, so to be able to travel, you know, a couple of 100 miles and target particular areas is not difficult for them. You know, yeah, the simple answer is yes, we do have hotspots.
Jan, any hotspots which we haven't already tackled?
Yeah, you know, where's the business being done? You know, you have the big ups, you know, Rotterdam area, but I know that's my country down the Netherlands. Venlo area, it's consumer electronics, all the companies there. The criminals are out there, they're waiting for the truck and their targets. And, you know, and the traditional ones, Paris, Milan, name them, you know. But for me, it's all over, you know.
Yeah. So basically, they just stick to what they were doing, but then better. Okay, good. Let's spend some time on the global risk development, because everybody is now afraid that tariffs are being thrown left, right, and center, that people will change their supply chain massively and everything will change. Ian, any idea about what will happen now after the tariffs? Will companies move their supply chains or not?
Yeah, I guess they will. We're always very reactive, though, aren't we? And it takes time. I think what you probably find is the criminals will react quicker than the companies. You know what? And I think we saw that with COVID. Anything that happens on a global basis, the criminals always seem to be that one step ahead, don't they?
Thomas, any ideas on what will happen? Would it be similar like COVID, that companies will just wait out and see what happens?
Yeah, I think it's a different question at least. And now we see the ships don't pass the Red Sea. They are forced to go via Cape Good Hope. And we have some clients, they say, well, okay, we did it, we planned it because we know otherwise it's not insured. But the captain decided we go the straight way. And I said, okay, this as a former captain is for me, a nice story, but nothing else. But anyhow, we'll have to see the development, as already said this morning. Day by day you have new information, new news, and then we have to react on it. But we can only react.
Jan, is news coming faster? Are changes faster now? Do companies have to react faster to supply chain changes or challenges?
Well, this, not a formal AIG opinion. Read the disclaimer here, please, because it's almost a personal question. That's what I think about it. But we all see it. The world is definitely changing. I think the audience here, they are even more on top of it than we are. We are reactive. As an insurance market, we see what our clients are doing, and we are being asked to provide insurance again. So it's really a reactive approach that as insurance market we have. Do we see it? Yes, I do see, some nearshoring. We have seen some stuff moving. What happens now, today, let it settle down, let it blow over. Nobody is going to make decisions on the short term on this one. The investments are too high, I guess.
Great, thanks. We have a few minutes left, so we'll start look at the app, which is different because then I have to look differently. Otherwise you can't read it. No, it might work, but I only have to look at it. So, as an answer, would you as an insurance company share the data with TAPA? I think that's an interesting question. Yeah.
Only when it's sanitized, completely. Because that's of course, we got the question, can we share it? We need your approval to share it, but only if it's completely sanitized. And my idea is even not AIG sharing, but there is a platform like Ayumi and not AIG on its own, because that's not my personal vision. It should be the industry collectively, and I think through Ayumi, and then get the data to TAPA. The data's there. We all know, we heard, Europol, police forces, they are using this data to help us. We should help them, That's the only way to tackle this, get the data there.
I think it's really a challenge because we have our own supply chain and information in case of claims. We have the client, we have a broker, we have a claims manager, we have a boss of the claims manager, and everybody says we have to protect our client, we have to protect and to act in accordance with data protection, and therefore that's another big issue what we have to face.
I think it's the same reaction as if you ask why is your logistics service provider not sharing the data. So the DHL, the Schenker, Kuehne+Nagel and everything. It's the fact that it's not our good. We provide a service, we cover financial loss, but the actual loss, it's not our loss. It's the product owner's loss. So he's the one that has to report it into TIS. And based on the data we've had in the last few years, unfortunately, not many of our members actually report their stuff. It's being reported by law enforcement agencies, but how accurate is that data? So as an insurance industry, to start tackling the data, we are highly regulated. That's going to take a very long time, I think, in all honesty. And we had another question. In general, how much is the deduction of premium insurance fee when considering loss prevention action? So if you implement something, will it have an effect, immediate or long-term effect on your premium? Who wants to pick that one? Yeah.
Honestly, if we start, we start getting this relation, if you have no measures at all, in the first place, implementing standards takes time. We all know that. Implementing does take time. So for the first year, we don't expect any big changes. That's my thought always. And after the first year, if we show that we build up this relation, it goes down. When your loss is going down, your insurance is going down. Your standards, your conditions improving, absolutely it does. But once we have already a 10-year long relation or whatever, and there is a standard, you're already rock bottom, I guess. And my thinking is that the companies sitting all here, TAPA, you're breathing TAPA, so you know what you're doing. Talk with your risk managers, but I think they should have quite profitable premiums, or you do something wrong still somewhere in the outskirts of your organization. That's the way that I look at it.
Ian?
Yeah, again, to reiterate what we said before, we're not underwriters here, so we don't really get involved in pricing. But what we do is, every risk has a price, and the market is fairly static in that sense, and underwriters know what a risk is worth. I'd probably flip the question round and say that if you are having losses, there's no two ways about it. Your premiums will go up, and even if you move insurers, that your loss ratio will dictate more or less what premium you pay. It's what you want is to get your risk back down to that level of parity and the way to do that is to put the loss prevention strategies in place, and we've done that with clients. We've had them burn in massive loss ratios, and we've worked with them. We've put the strategies in place, and ultimately those premiums have come down. Equally, we've had clients who have not chosen to engage in the loss prevention programs with us. Their claims have continued, and ultimately, the premiums rise.
So I have two things which I think we can combine. One of them is how highly rated is the security certification, and the other one was how do we look towards countermeasures against fake carriers. So both of them are about implementing measurements to prevent losses. I think our work is that's what we try to find out with our customers. If they have any of these implemented, we then feed it back to the person who's actually in charge of calculating the premium, because it's about the level of trust that we should get from our customers. So if we visit one of our customers and they show everything they've implemented, it gives us I would say, a good feeling. And that's being resonated back to the person who's actually charging you the premium. It also goes the other way around, by the way. So, Ian?
Yeah, I think the TAPA standards are a fantastic benchmark for that for us as insurers. We look at facility, and it's quite certainly TAPA A rated from FSR point of view. We are happy to take risk on that. We may even, if it's not too big an exposure, we may even just choose not to survey it because we know the work has already been done. It's achieved a standard that we would be more than happy with ourselves, even at a lesser level as well. That TAPA stamp, if you like, is worth an awful lot, I think, in our industry.
Yeah, well, I agree. There's one question. What does the panel think of the balance between moving cargo quickly or moving it securely? Thomas, would you like it? Sorry, again? What do you think of moving cargo quickly or securely?
Yeah, for me, it's no doubt secure with a good security in place, of course. The quicker it is, we also had a lot of experience, especially with always the same claims. You pick up a truckload on Friday evening with some copper or some metal parts, send them to Poland or wherever, and everybody's trusting and promising, yeah, they will arrive, of course, Monday morning, 8 o'clock. And on Wednesday, you're still asking, where's the truck? And the truck is gone. And therefore, this is always, everybody is in a time hurry and has no time. But if you do it at very short notice, you should keep a very, very special eye on it.
Okay, thanks. There's a question about the introduction of EV vehicles. Do we see them as being a larger risks to building and freight? If they do fit any thermal detection, would this reduce premiums? I think this would fall in a category of implementing loss reduction issues. I do now know from the colleagues that work in property that if something gets on fire with electric vehicles, thermal detection is nice, you know it's fire happening, but it won't stop it. So do we see a risk on using EV vehicles in future?
Well, we had some experience with it, and all people which were involved, they definitely said if you see EV cars and a normal car, the risk is not higher at all for normal transportation. We are not talking about charging or whatever. For normal transportation, the risk is definitely not higher.
I think also from Ayumi there was the feedback that the risk is not really with the car, it's with the batteries which are being used, and then mainly the ones which actually have been used. So that's damaged batteries, return batteries, which have a higher risk. If one car burns, it burns. But in all honesty, even a petrol car is now the majority of it's plastic. So it's not that steel anymore. I got a signal from Sam, so 2 minutes. Okay, cool. Would you recommend a review of the CMR carrier liability limitation? Perhaps different levels based on implemented security measures? So you basically would extend the CMR if security measures are implemented. Do we see customers which actually go beyond CMR liability? Oh, okay.
No, you have the shippers interest programs, so that means you have the CMR liability, but in case you're liable, you can increase, it depends on the insurance you buy. So it's there. So then, in a way, you become the cargo insurance, because you increase your liability limit to cargo value, perhaps, whatever value you choose or you opt for. But, then we definitely, loss prevention-wise, it's a different way of looking at it, but still it's your CMR liability, But, yeah. I don't know if that's an answer to the question.
Yeah, not directly answering to that, but an interesting conversation that we had at lunch, wasn't it? We've got a case at the moment where the CMR liability has been waived in the Dutch courts, or set aside, shall we say, on Article 29 for the willful misconduct. Going back to linking it into the freight exchange site, because the client had used, the carrier had used the freight exchange site, and the Dutch courts have chosen to treat that as willful misconduct and not limit the CMR. So we're actually on for the full value of the loss, which is, I know that wasn't the question that was asked, but I just thought it was
interesting,
quite relevant.
Yeah. Okay, our time is up, so 13:45. I can't see, oh, there she is. Great, well, thanks everybody for your participation. And Sam, can we get a bottle on the bar?
Yeah, sorry, Bjorn, I'm behind.
Get a bottle from the bar.
You have to order, ask that with Torsten, but could you all join me in thanking our insurance panel? Thank you all so much, gentlemen.